Welcome to the video tutorial Economic Activities. This tutorial has been prepared to provide you with background information on selected economic activities. The following topics will be addressed: for-profit and non-profit activities, legal forms of economic activities, modeling of economic activities, modeling perspectives, flow and stock figures. The video tutorial will be concluded by an imprint. Which economic activities can be roughly distinguished? In principle, a distinction can be made between non-profit and for-profit activities. These two basic activities can be described in greater detail by using a number of additional criteria. Firstly, the two activities can be distinguished according to the legal form used for the legal organization of economic activities. Non-profit activities are generally organized as legal entities. Profit-oriented activities can be pursued by natural persons or legal entities. Secondly, the two activities can be differentiated according to property rights. In non-profit activities, there are no owners, or at least no profit-oriented owners. In the case of for-profit activities, the owners pursue a profit-making intention. Thirdly, non-profit and for-profit activities can be distinguished according to the central figure used to numerically quantify the economic result. In the case of non-profit activities, a surplus is commonly calculated. In the case of profit-oriented activities, as the name already suggests, profit is used as the central calculation and performance indicator. Fourthly, tax treatment can be used as a differentiation criterion. Non-profit activities are not taxable, or at least tax privileged. Profit-oriented activities are regularly subject to profit tax. Last but not least, differentiation can be made according to how economic gains are handled. Non-profit enterprises may not distribute surpluses to third parties in disregard of their purpose. Profit-oriented enterprises may distribute profits to the owners. In economic reality, there are hybrid forms and/or structures that combine elements from both spheres. Which private company forms can be distinguished? Private company forms can appear as sole proprietorships or as partnerships. A sole proprietorship is the legal form of a natural person that pursues a business activity. An example would be a coffee shop owner. The sole proprietor assumes unlimited liability for his economic activities. This means that in the event of losses from his business activities, he has to add money from his private assets. When several persons form a company in order to conduct a commercial business, this is called a general partnership. The partners assume unlimited liability for their economic activities. This means that in the event of losses from their business activities, they have to add money from their private assets. However, there is a special feature here. All partners are jointly and severally liable. This means that a creditor can demand the full amount owed from each partner, but only once in total. In the internal relationship, the partner who has satisfied a creditor can demand compensation from the other partners. As a consequence, he bears the risk that the other shareholders cannot compensate him. Obviously, not every partner will be prepared to accept such joint and several liability. In such a case, the legal form of a limited partnership can be used. A distinction is made here between general partners and limited partners. The general partners assume unlimited liability for their economic activities. Again, all general partners are jointly and severally liable. The limited partners, on the other hand, are only liable with their capital contribution. Which major capital company forms can be distinguished? If none of the parties involved is prepared to assume unlimited liability, then the formation of a capital company is an option. The two main forms of capital companies are the limited liability company and the public limited company. In both legal forms, the liability of the shareholders is limited to their capital contribution. Capital companies may be founded by one or more natural persons or by one or more capital companies as shareholders. In a limited liability company, shares can be transferred from one partner to another only by purchase agreement. The shares in the company are not tradable on a public market such as a stock exchange. In a public limited company, shares can be transferred from one partner to another partner by purchase agreement or can be traded on a public market such as a stock exchange. As shareholders usually have little or no insight into the activities of the public limited company, the issue and trading of shares is subject to strict supervision by national securities regulators. How can reality be perceived in its complexity? Science can be characterized as an activity that systematically seeks knowledge that describes reality. In the majority of cases, it is not possible to fully describe the complexity of a given segment of reality. Therefore, a simplification of reality is needed. Models are simplified illustrations of real situations. Their purpose is to solve problems which cannot be solved based on reality. The main characteristic of models is the simplification of a given or expected situation. Accordingly, complexity should be decreased by selecting the relevant phenomena and connections. Basically, two different procedures of model deduction can be distinguished. Reductive models. Reductive models reduce reality. In other words, one reaches from reality to the model via abstraction. Constructive models. Constructive models can construct a simplified model of a fictitious reality. In other words, one reaches from a theory to a model via construction. Let us explain this logic with a simple example. A company runs a plant abroad. The reality of this plant can be illustrated in an abstract and isolated way within the framework of accounting. Obviously, it can solely be an abstract illustration, as the accounting for the plant is not the plant itself. In other words, accounting is a model that illustrates the economic activities of the plant in a simplified way. Consequently, the accounting for the plant is based on a reductive model. In a second step, the company intends to build an additional plant in another country. In order to be able to decide whether to undertake the investment, the management needs a financial projection, which will be realized with the help of a spreadsheet software. However, this financial projection is not based on a real plant. Instead, its construction is based on generally accepted technical and economic rules. Together with empirical values and anticipated data, these technical and economic rules form the basis for the financial projection. Consequently, the financial projection is a constructive model. Which perspectives can be employed when modeling economic activities? A distinction can be made between a prospective and a retrospective perspective. The two forms are best explained using a timeline. A planning interval or a reporting interval exists for which a model calculation is to be created. This interval has a period beginning and a period end. For planning purposes, you can take a perspective that lies before the beginning of the period. Such a perspective is prospective. For reporting purposes, a perspective after the end of the period can be adopted. Such a perspective is retrospective. The beginning of the period is the beginning of the planning period or the reporting period. The end of the period is the end of the planning period or reporting period. Which two basic types of measures are used when modeling economic activities? For this purpose, the terms stock figure and flow figure need to be introduced. The differences are best illustrated by a timeline. A stock size always refers to a specific point in time, which is here designated by t is equal to 0. A stock figure represents a snapshot. For other points in time, stock figures can also be calculated, here for example marked with t equal to 1. A flow figure measures the changes that have taken place between the 2 points in time. Flow figures thus represent a sequence of many individual snapshots and can be interpreted in a figurative sense as a film of the enterprise. The context visualized here can also be expressed by a formula. The opening balance at time t is equal to 0 plus the sum of the changes is equal to the closing balance at time t is equal to 1.